Welcome to the deep dive. Today we're jumping straight into Zscaler. Their Q4 25 earnings just dropped, along with their guidance, our mission. Let's unpack these numbers, see what they mean for Zscaler and for the bigger cybersecurity picture. Okay, let's get right into it. Zscaler definitely popped on these results. What were the key numbers that stood out, the ones that beat expectations?
Yeah, they really did. The market reaction was pretty immediate. So looking at the specifics for Q4 25, their adjusted earnings per share, the EPS, hit 89 cents.
9 cents, okay.
Right, and the estimate was only 80 cents, so a solid beat there.
Definitely.
And revenues came in strong too,
Mm-hmm.
$719.2 million against a $707 million estimate.
Okay, so beating on both top and bottom lines.
Exactly, and that's why you saw the stock jump, about 5% right after. Plus things like deferred revenue and calculated billings, those were also ahead of expectations. That points to future strength.
Right, those leading indicators. So these beats are great, obviously, but what do they tell us about Zscaler's overall health, like the bigger growth story?
That's the key question, isn't it? Connecting the dots. Well, their ARR, annual recurring revenue, that grew 22% year over year.
Okay.
And importantly, it crossed the $3 billion mark. That's a huge milestone for them.
Wow, $3 billion ARR.
Yeah. And calculated billings up 32% year over year to $1.2 billion.
Yeah,
So customers are clearly committing.
strong commitment.
And operationally, they've really shown. Non-GAAP operating income was $158.9 million. That translates to a 22.1% operating margin.
Which is good.
It's actually a quarterly record for them.
Yeah.
And maybe the most impressive part, for fiscal 25, they hit the rule of 50.
Rule of 50. I know, rule of 40.
Exactly. Rule of 40 is great, right?
Correct.
Revenue growth plus free cash flow margin. Zscaler hit 50. That's 23% revenue growth plus 27% free cash flow margin.
Okay, so that's highly efficient growth.
Very efficient. It puts them in a pretty rarefied category among big SaaS companies. It's not just growth, it's profitable growth. That's what the market loves right now.
No kidding. That really frames CEO Jay Chaudhry's comments about an outstanding Q4 and how, zero trust and AI security are becoming imperatives driving that robust demand. But let's look under the hood. Beyond the financials, what's actually driving this? I heard they talk about 3 main growth vectors.
That's right. The strategy hinges on these 3 areas: AI security, zero trust everywhere, and data security everywhere.
Okay.
And what's interesting is, combined, these 3 already passed $1 billion in AR in Q4, and they're actually growing faster than Zscaler's overall AR.
So that's where the acceleration is coming from.
Pretty much, yeah. It highlights where their focus is and where the market demand is surging.
Let's dig into AI security first. This whole omnipresent AI thing, it must be creating completely new headaches security-wise.
Huh.
How's Zscaler tackling that?
Oh, absolutely. It's a huge challenge. Get this. Zscaler saw a 3,500% increase, 3,500% in AI and ML transactions on their cloud platform just in the past year.
That's astronomical.
It really is. And with that comes new risks.
Right.
Things like model jailbreaking, prompt injection, even model poisoning, stuff we weren't talking about much a couple of years ago.
Right.
So Zscaler is responding with specific tools like Zscaler AI Guard for applications to secure how companies use AI. And they're extending their zero trust approach to cover agent-to-agent communication.
Meaning AI talking to other AI.
Exactly. As more software gets its own AI agents, securing that interaction is critical. Their agentic operations portfolio, which covers CCOPS and IT ops automation, is projected to hit over $400 million in ARR in fiscal 26.
Yeah.
And you see proof points like 58% year-over-year growth in bookings for their ZDX Advanced Plus offering, which includes their ZDX Copilot.
Got it. So real traction there. Now, zero trust everywhere. It sounds good, but what does it actually mean for a company implementing it? And a company's really going all in?
Yeah, it's more than just a buzzword for them. It's about applying that never trust, always verify principle to everything. Every user, every branch office, every cloud workload. No more network perimeter thinking.
Okay.
And adoption's picking up. They ended FY25 with over 350 enterprises using the full Zero Trust Everywhere platform. They're getting close to their FY26 goal of 390 already.
So tangible progress. Any examples?
Sure. One Global 2000 manufacturer, a big one, signed a 7-figure ACV deal annual contract value to put Zero Trust Branch into over 120 plants.
Wow, 120 plans.
Yeah, and they expect over 60% cost savings by ditching older stuff like SD-WAN and firewalls.
That's a huge saving.
It is. And they also had their biggest ever branch deal in Q4, a big university securing around 150,000 devices across 400 locations, another seven-figure deal. But this one was a new customer.
Okay, so landing big new logos.
Right. And to speed things up, they've got this new cloud gateway solution. They claim it cuts Zero Trust cloud deployment time down to under 10 minutes.
Under 10 minutes. That's fast.
It's definitely a selling point for big organizations.
Okay, third vector. Data security everywhere. How is securing the data itself different, and why focus on it separately?
Well, data is everywhere now, right? Not just in your data center. So securing the data itself, wherever it is, however it's used, is crucial. This vector grew to about $425 million ARR.
Still significant growth.
Absolutely. The idea here is consolidation. Companies often have, separate tools for email data loss prevention, DLP, endpoint DLP, cloud DLP, maybe Gen AI security tools.
Right, a patchwork.
Exactly. Zscaler aims to bring all that onto their single platform. There was a case study of a Fortune 500 services firm. They rolled out the full Zscaler data security suite for 350,000 users.
350,000 users.
Yeah, consolidating isolation, email DLP, endpoint DLP, Gen AI security, all onto Zscaler. It simplifies things massively, improves visibility, and it usually saves money too.
Makes sense. Less complexity, better security posture. Now, you mentioned simplifying things. I heard about a ZFlex program aimed at helping customers adopt more of the platform.
Yes, ZFlex. It seems to be working quite well. It brought in over $100 million in total contract value bookings in Q4 alone.
TCV, so the full deal value.
Right, over the whole contract term. And that was up 50% sequentially from Q3. So, rapid uptake.
Why is it popular?
It offers customers more flexibility in how they consume services and simplifies the buying process, especially for larger multi-year deals. We saw, for instance, a big energy customer use ZFlex for an 8-figure TCV deal.
8 figures. Okay.
And they increased the number of Zscaler modules they use from 14 to 19. That move more than doubled their ARR with Zscaler.
Wow. So it's clearly driving deeper platform adoption.
Exactly. It helps customers move towards that full platform vision more easily.
Okay, this all paints a very positive picture. Let's shift to the future then. What did Zscaler guide for the upcoming quarter and the new fiscal year?
The guidance definitely reflects that confidence. For Q1 fiscal 26, they're projecting revenue between $772 million and $774 million.
And how does that compare to estimates?
That's nicely above the analyst consensus, which was around $751 million. And non-GAAP EPS is guided at $1.85 to $8.86 for Q1.
Okay, strong start to the year expected. What about the full year?
For the full fiscal year 26, they're guiding ARR between $3.676 billion and $3.698 billion.
Getting close to $3.7 billion AR.
Right. And full-year revenue between $3.265 billion and $3.284 billion. Non-GAAP net income per share for the year is expected to be $3.64 to $3.68.
That's quite bullish. What assumptions are baked into that? Any major factors influencing those numbers?
Good question. A couple of key things. First, the Red Canary acquisition, which they recently closed. That's expected to add about $95 million to the full-year ARR and $90 million to revenue in FY26.
Okay, so that acquisition boost is factored in.
Right. Also, strategically, they mentioned they're now focusing on full-year ARR as their primary growth metric, which emphasizes that recurring revenue stream.
Makes sense for a SaaS company.
Right. And importantly, they're assuming the macro environment stays relatively unchanged. So no major economic downturn or unexpected boom factored in?
Prudent, probably.
Seems so. And one detail on margins. They expect Q1 gross margin around 80%. They noted that some newer products, especially in AI security, are optimized for speed to market initially, not peak margin. Margins should improve as those products mature and scale.
Standard playbook for launching new tech. Get it out there first, optimize later.
Pretty much. Capture that market share while it's hot.
So pulling it all together, the strong performance, the innovation, the ambitious guidance, what does it say about Zscaler's position in the market overall?
Well, they're playing in a huge sandbox, right? The security market is estimated at over $100 billion. And Zscaler has carved out a really dominant position.
How dominant?
Consider this. They secure nearly 40% of the Global 2000 companies and over 45% of the Fortune 500. That's serious penetration among the world's largest organizations.
That's impressive reach.
And the sheer scale is mind-boggling. Over 50 million licensed users. They process more than 500 billion with a B transactions daily.
500 billion.
Yeah, apparently that's over 50 times the number of daily Google searches.
Mm.
And through that traffic, they block over 9 billion security incidents and policy violations every day.
That scale gives them incredible visibility, I imagine.
Exactly. That huge data flow feeds their threat intelligence,
Yeah.
making their platform smarter. It really solidifies their position as, a foundational piece of cloud security infrastructure for many companies.
So to wrap up, Zscaler delivered a really robust Q4, strong beats, record margins, hitting that impressive rule of 50,
Definitely.
and fueled by innovation in AI security, zero trust, data security, plus initiatives like Z-Flex driving platform adoption. And the forward guidance looks ambitious but grounded.
Seems that way, yes. They've set a high bar for FY26.
But here's something to think about as we finish. AI adoption is just exploding, right? And threats are getting way more sophisticated. How are businesses actually going to balance moving fast with technology against the absolute need for solid, adaptable security? It feels like a real tension point. And what kind of new things might we see from Zscaler or others like them as everyone tries to navigate that? That's the big question going forward, isn't it? Definitely something for you to mull over.